Hey guys, I'm Big Mike, and like always, I'd like to welcome you today. We've got order flow analytics for our first Ask Me Anything session. The sessions are designed to be quick, to be casual. It's no formal presentation. It's not a big webinar. It's just a real quick session. We're going to limit it to 30 minutes, and it's just to answer people's questions about a specific product in this case. DB, I'll turn things over to you and go ahead and get started. I know you have a unique situation today, so hopefully we'll still be able to answer everyone's questions.
Thanks, Mike, and thanks for having me, and I appreciate everybody who managed to make it here. Mike was saying I have a unique situation. We've had a bit of a family emergency, and I was trying to get some things rescheduled, and we weren't able to do it. So needless to say, I'm here, but I'm not at my office desk, and I don't have anything prepared in terms of slides or anything like that. So
yeah.
What I'll do is just kind of give you a little bit of information about us and the product, and then obviously I'm more than happy to answer anything that I can.
So
is that all right, Mike?
Yeah. So just so everyone knows, since this is our first AMA, normally there would be a live screen share as well, but because of DB's situation, we're not going to be able to do that today, but we will still have audio. So as you guys think of a question that you want to ask, just go ahead and type it, and we'll get started with those.
Very good. Okay. And again, I apologize for not having something for you, but I know we'll be doing there is a good thread going, and I'm happy to answer any questions there as well if you need more than what I can give you today.
Right. We have a full webinar scheduled with you, a regular presentation also, and that's coming up April 4th. So DB, let me ask you first, just a real generic question right off the bat. What is order flow to you?
Okay, well, that's a great question, and there's been a lot of back and forth on the thread about it, and I know all over your forum. And to me, I think more than anything, it's making sense of the market-generated data. I've posted a lot of different definitions, and a lot of other people have too. And I think a lot of times just some reflection from the way that other people look at things makes me kind of want to get a little bit more simplistic. So in general terms, I think that we've over a period of history related things as tape reading, and people talk about reading the tape or reading the print, and I think that we've hit an impractical point with a lot of that information, and that there's so much of it. And so in my view, essentially what we're doing is organizing the time and sales data into a format that allows us to make relative comparisons. And while that's probably not the best explanation in the world, it's just kind of making sense of what's actually taking place with the trades on a tick-by-tick aspect.
Okay.
There are a lot of variations to that. I think a lot of people have gone in a lot of different directions, and I'm certainly not going to say anything's right or wrong, but the general premise is that if you're taking a look at the trade and comparing it to either the bid price or the ask price and seeing where it was struck, then from that you can infer that there was intent on one side or the other.
Okay.
So, for example, if trade is struck at the bid price, that would infer that there was someone selling into the bid, and so it might have a more sell-side connotation.
Okay. I have questions about that, but before I ask, I want to just mention one more time, since we've got a lot of people that have just logged on to the room. First of all, that we're limited to 30 minutes, so you don't want to be late next time. And second, DB had a family emergency today, so he's unable to share video because he's logged into someone else's computer, but we are taking questions. All right, so there's a couple questions on the board, but I wanted to follow up real quick with something that you just said. You said that an order at the bid would be perceived as selling pressure, and an order at the ask as buying, right? Now, to me that sounds to me that sounds a lot like cumulative deltas, assumptions of market orders, which the underlying assumption with cumulative delta, as I understand it, is that market orders should be measured with more weight than limit orders. But how do you count for limit orders? How do you count for, icebergs and so forth? How can you be certain that it really is the direction
and that's
that you think it is?
one of the things. Right, and that's one of the things that I wanted to kind of follow up in that statement. That's been kind of the general premise, and as a trader who has really dug into this data, I have a big problem with that. I mean, I know that there's a buyer for every seller and a seller for every buyer, so I really don't like the basic concept that we have to treat everything that takes place at the ask as a buyer or everything that takes place at the bid as a seller. I think there's probably some intent there just from, if you look at it, the example that I like to give people, and I'll try not to drag on because I know there's other questions, but the example that I like to give people is when you go and buy a car. You may leave your house with a notion in mind of what you're going to spend, and when you get to the dealership, that dealer has a notion of what he's going to sell that car for. And at some point, somebody's going to have to give in order for that transaction to take place. And if you think about it in those terms, it's either that you decide that you really want the car and you don't care, and so you'll pay a little bit more than maybe you intended to, or the dealer is willing to make that concession because he really wants to sell the car and make the commission. And so it's not to say that both sides of the trade aren't taking place and that both sides aren't happy, but at some point there's just simply a notion that somebody actually initiated that. I think in that context, it really doesn't make any sense to make a judgment call about what's going on unless you're comparing it to some sort of directional movement. So if we're sitting at one area of trade, let's say a 3 or 4 price kind of area, and there's trade going on back and forth and back and forth and back and forth, I think comparing the bid to the ask and the ask to the bid and back and forth and trying to make some assumption about who's on top doesn't necessarily make a whole lot of sense until we move away from that. And once there's some price action away from it, well, it's very easy to see who overcame, and then you know that there's trade that's going to get stuck upside down. And the reaction is, what happens when those stops are triggered? Because if you're short and the market moves up and you have to unwind that position, obviously those positions start coming out as buy orders. That's the only way to get out of the market. And so I think a lot of price movement is actually driven by stops rather than this engagement of market orders, even though technically speaking usually a stop is a market order. But if you just kind of keep it in simple terms, the notion that one area of trade has any relevance as to the buy side or the sell side when we're trading there just because there's there's millions of contracts that are taking place, right? Millions of transactions. So I'm not a big fan of the cumulative delta thing, and I'm also not a big fan of weighting it as buyer to seller, because I think it's kind of ridiculous and that it just doesn't go along with the market dynamics. I mean, it really doesn't. We all know that there's a trade on either side.
All right. Several follow-up points that I wanted to make, but I want to make sure that everyone has an opportunity to get their own questions answered. So let's skip to a question here from George. George is asking, is order flow just another term for time and sales?
Yeah, I would say this is one of those things that I've had to come around to, and mostly from just the posts that are going on in the Ask Me Anything thread. You can glorify it any which way you want, but basically if that is your limited scope, is to try and make sense of the time and sales data, and that's generally what a chart and that you can call it anything you want, a price ladder, a footprint, whatever you want to call it. If that's your total scope, then I would say, yeah, it's glorified time and sales. You're putting the data into an organized format, and then what you do with that is really I think the key element that most people are missing.
Okay. Richard is saying thanks for the thread, and he's asking, in the thread there was a comment about who the main competition is. Is it institutions? Is it retail? And you had mentioned the retail, so you should focus on because it's easier to take money from them. So Richard is asking, do you know a usual percentage of retail versus institutions at any given time? And I guess we can just talk about like a market like the ES.
Okay. Well, listen. In the thread, I guess what my point was, is that you ought to pick your competition. Not that the retail market is larger than the institutional market, and particularly with the ES. I mean, it's used for a variety of hedging, and there's a lot of purpose behind it from the institutional side. So don't get me wrong. I wasn't saying that the
Sure.
retail market is much larger.
I
I
understand.
think that when I wake up in the morning and I have to look in the market in the mirror and say, you know, who am I going to take money from today? Because that's what trading is. I mean, if you don't have that attitude, this is never going to be a successful mission for you.
Yeah.
So I get up in the morning and I look at the market as a way for me to take advantage of somebody else. And while that may sound horrible to someone who maybe has a different philosophy in life, that's how it really is. And when I look at the print and I see where there's a lot of trade taking place, I can develop expectations about what's going to happen in areas very close by to a lot of people who are going to be stuck upside down, and taking advantage of that and knowing that there's nothing I can do to beat out an institution that has stops broader than anything that I can imagine, different purposes for utilizing the instrument. I mean, I could chase that around forever. But what I do know is that when people get stuck upside down in very logical places, it's very easy to take advantage of it.
Sure.
And that is my target. I don't look to trade all over the chart. I look for those areas where it's a sucker play. You know it's a sucker play. And when you can see what's going on and you can see the accumulation of suckers getting sucked in, that's when you want to act.
So a follow-up on that, Bob is asking, how do you generate entry signals using order flow?
Okay, well, that's a great question. From my standpoint, I don't think that order flow is an entry mechanism by itself. I think that there are people who probably, in fact, there was a guy who posted in the forum about how he had scalped a long time just from the dome and the time and sales, and that's certainly not. I wouldn't even know where to begin. To me, for me, I think that you really need to have some sort of tactical strategy to trade before you get into order flow. So you could take something as basic as pivot points and fibs and things like that, or be someone who studies market profile or volume profile or chart patterns, or you name it, just about anything that you can imagine that produces areas on a chart that you would gain interest in. So a very easy example would be a pivot trader who has a pivot level that he's got interest in. Order flow, if in my eyes, if you're going to put the pieces together, then what you're looking for is what happens in the print when you get to that pivot. I mean, if your idea is that the market's going to move up to this pivot and I'm going to be looking for a sell signal, then when we get up to that level, I want to know what's going on in the print. I want to know whether we see momentum in the print, exhaustion in the print, or if it's a lot of two-sided trade where I can't really make a decision. And so in that capacity, it provides a lot of insight. But to me, it doesn't provide any way to simply dance around a chart and find buy and sell signals. Sure. I think it needs to be combined with a broader strategy that simply needs honing. And I think that's what a lot of traders need is just honing of what they've already learned. Most people can learn great trading strategies just from books and forums and things like that without having to lay out a massive expenditure for a seminar or software or anything else. The problem generally comes in that they don't have any confidence in what they're doing, because it's kind of left up to the idea, well, sometimes pivots work and sometimes they don't. Well, it's not to say that I know why they sometimes work and why they sometimes don't, but if I've got a little bit more insight as to whether or not they're likely to, then that puts me on a different playing field, and I think that's what most traders are looking for.
Okay. All right, so I see some questions about why we're not sharing video. So for everyone that joined late, a couple of things. DB had a family emergency. He's logged on to a remote computer. There's not going to be video today. There normally will be video on these Ask Me Anything sessions. We're also at the halfway point, 15 minutes in, so we have 15 minutes left. I want to try to keep these quick and casual and capped at 30 minutes. All right, next question is George is asking, And we kind of covered this already, so we can just be brief. He's asking if cumulative delta is an important part of order flow.
Okay, I'll be brief with it. In my opinion, I don't think the logic adds up. I try and keep everything in terms that I can understand, so that if I have to explain something to you as your mentor or your teacher or something like that, you have to be able to look back and say, yes, that makes perfect sense to me, I get it. And if you put that stream of logic into the middle of what I do, I would have to say, no, I can't get my head around it. I don't see how treating everybody on one side as a buyer and everybody on the other side as a seller over any distance of time from random points on a chart makes any sense. It just doesn't to me. That's not to say that somebody else couldn't do a really good job of explaining it to me, but nobody has yet.
Richard's asking a follow-up question about his retail versus institutions. So just real quick,
Okay. Sure.
He's asking, what trade size do you think is typical for retail? And I don't understand the second part of his question. So I've always had this basic thought process that there's, small institutions, medium institutions, big institutions. Small institutions are mainly trading against retail. Then they offer it up to the bigger institutions, and then those institutions offer it up to the really big institutions, and so forth and so on. How do you view all that? Do you have any idea? What do you think of in terms of size per day that a retail is putting on versus an institution?
Well, I think it's really hard to make that call because I've got a couple of straight-out retail traders that trade much larger size than I can ever imagine. And on the other side of it, I've got a prop shop that I work with that doesn't trade much size at all. So I think it's very hard to. Again, I think your breakdown of it, Mike, makes a lot of sense to me. But in my experience, the typical retail trader is they're not generally trading 50 to 100 lot trades. However, I have a couple that do. So I think it would be. I don't really think you can put that in a box, and I generally don't look for the size of a trade anymore. I think the way that the volume is reported now versus about 2 years ago is so different that it's really hard to say, well, that block trade means that it's an institution. So,
right, when they unbundled.
Right.
Okay, Igor is asking, he says he has several versions of OFA, order flow analytics. One with just the COT, committed traders numbers, at a cluster, and another with volume and percentage and delta. What's the difference? I guess he's saying, he says he has two different versions of your software, and one has the COT represented as a cluster, and a different one has it represented as volume by percentage. So
okay.
Igor, that's probably better asked in the thread, so you can make it a little bit more detailed.
Yeah, or if you're a client, send me an email and,
right.
and we'll talk about it, and I'll break it down for you. I'm a little bit confused, but we've had 6 versions over 5 years, so I'm happy to walk you through the most current one, and we obviously have plenty of training videos for you. So.
And we'll try to speed up just a little bit here since we have only 12 minutes. I'm trying to keep a close eye on the clock here. Another question from Igor. 6C and 6B are very volatile for a novice with a small account. What account is sufficient to trade them with OFA? What stops should the account?
I have to throw up the flag there. I'm not a trading advisor, and I don't. My personal opinion is that if you look at the actual day margin required by the actual margin required by the exchange versus what your broker is or your IB is offering, probably a $500 day margin or something. Look at what the exchange recommends for margin, and then multiply that by 3, and that's what you ought to have in your account per contract, in my opinion.
Yeah. Igor, I have a very good webinar. If you go to the webinar section, do a quick search for where to start. There's part 1 from last year that focuses on which instruments to trade, how much their tick values are, average daily ranges, margins, and all that kind of stuff. Okay.
I would just like to follow up just from my perspective. I honestly think that there is a big difference between the 6E and the 6B, but I would tell you that my experience trading the euro right now is like the ES was 4 or 5 years ago, and I loved it then, and now I don't really like the ES near as much as I like the 6E. So while it may seem fast and sporadic to you, it's a very nice market to trade, and I would try and get your head around that rather than something that's turning really slowly.
Ted is asking what is an iceberg on order flow? I guess he's asking how does it show up on order flow?
I honestly have no idea.
Okay.
I prefer to just be honest with you and tell you I have no idea.
I mean, it should show up as a regular limit order because as far as it's being executed, that's how it would appear. It's just not visible until it actually they put the order in the queue.
Right. I mean, to me, I don't think there's any difference between what the print looks like. It either happens at the bid or at the ask or in between or above or below.
Yeah. So if you don't know what an iceberg order is, guys, it's just like let's say you want to buy 500 on the ES. Maybe you don't want to show your full hand of 500, so you can just show 5 at a time. And when those 5 are filled, then you refill, or 10 at a time, and you just keep refilling and refilling. And sometimes you'll see that on the ES, right, DB, where it holds this level, and you just keep seeing more bid showing up, to hold a level.
Yeah, it's baffling when it happens because you're trying to associate the market depth, and you're seeing, well, there's only a couple of hundred contracts left at this level, but it just never seems to be able to trade through. And so, yeah, I mean, that's something that we see, but I mean, in relation to how it shows up in the print, there are only 5 ways it can be there.
Right. Okay. JW is asking, do you have a tick volume indicator to track? Okay, so there's some indicators that float around that basically try to track trade size, and I've seen them labeled as smart money and dumb money indicators, to where it'll have like an oscillator where if the trade size is under a certain threshold, then it'll print one way. If it's over a certain threshold, it'll print another way. Do you use anything like that? Do you think there's any usefulness in dividing up trade size and trying to follow what they're doing?
I don't. I mean that I don't use anything like that. I don't know as per the usefulness, but I've just gotten to the point where I think simple is better. Wow. Sorry for the feedback here. Something going on.
It's all right.
Sorry about that. I'm not at my office.
Yeah, no problem.
Other people's electronics are making rackets, so I don't know how to do this.
Okay, so it's not too bad. We can keep going.
Okay, so anyways, to answer the question, I don't have really any use for that. I'm trying to make things simpler, not more complex, and I see a lot of people asking a lot of complexities, and I just wonder I always wonder how people get that deep into something and actually make practical use of it. So I don't know. I mean, Mike, just like you were talking about, if somebody's dumping 5 lot orders in a total quantity of 500, where does that show up on that?
Yeah. See, now I've done this real briefly. I did some research over several years of tick data since they unbundled, and the average size on the ES is something like 3 contracts. Mm-hmm. So I don't see any edge in trying to look for anything else because the average is so small that even Goldman Sachs is executing 1 lots.
Right. Exactly.
Okay. George is asking, we have a lot of questions, guys. I do my best to get everyone's answered here. George is asking, are dark pool transactions excluded from order flow?
Again, I'm going to defer to I'm too stupid to know the answer to this. I really am ignorant to the concept. The only thing that I can tell you is that I'm watching every tick that comes through. So however it exchanges in the market, that's what I'm seeing from the from the CME or from the Eurex or whatever it is. So.
And George, I'll just say if you do a search on BNT for dark pool, you'll find some discussion on that. Yui is asking, what's the difference of your live functionality and the replay functionality of the application? For example, he's using NinjaTrader and IQ Feed.
Okay, well, there really isn't any difference. In fact, probably the best way to do it, if that's what you're using, is to use NinjaTrader's replay and to just feed the data from there, because their historical data has been scrubbed and it plays back very well, and you can slow it down and speed it up at your will, and it'll just populate the OFA chart. So I don't think there's any difference between the two, as long as when you download the replay data, you download the level 2 data as well.
Okay.
Should be pretty straightforward.
Okay. JW asking, he says, you know a lot about bull and bear traps. How do I identify those as retailer traps to avoid?
Well, I think the most obvious, and these are things that you can see on a candlestick chart. It just doesn't translate until somebody's shown it to you in the volume. But when we have old highs, old lows, trend lines, simple patterns, things like that show up on a chart, or pivot points, or whatever it may be, you know that there is going to be that there should be a heavy exchange of volume at those levels. In other words, somebody who's long from a low somewhere in the day, taking out the position at a prior high, just something very simple like that. We know that there's going to be a tremendous amount of market depth at those levels, and what will either happen is that depth is indeed there. In other words, we hold a level and we start to see those trades come through that you just can't believe that we could accumulate 15,000 or 20,000 contracts at 2 prices or something like that. And we'll see that, and there'll actually be a response there, in which case the market will drop back down a little bit, and people will start getting anxious, thinking, "Oh my gosh, it really is a high." And a typical indicator is generally going to put you 1.5, 2 points off of a high before it ever tells you anything. Well, that's a classic trap. I mean, usually what's happening is somebody's getting just getting stopped out in a way to fill in a way to fill more orders when we drop back 2 points off an old high. So the same thing goes when we break through an old high by 2 points. If you look at the volume of what happens there, there's no market depth where you would expect it. Instead, it's 2 points behind the high, and the same exact thing happens to the momentum trader. So watching the print as you approach these levels that are clearly going to be visible to anybody. I mean, whether it's a daily high or the high of yesterday or something like that. I'm putting it in very simple terms, guys, but you can watch what goes on in the print, and you can see, oh my God, this is going to, they're just going to get smoked. And it's an interesting way to look at things, because when you start to understand what's happening, that the actual stop orders from a lot of these traders are what's propelling the market,
right,
one way or the other, then you can start to understand where you don't want to be a participant. And that's probably the most important thing you can learn as a trader.
Just discipline, patience, set on hands, wait for the market to move to your level.
Exactly.
Michael is asking, does OFA give an edge more to scalpers? He's a swing trader, is trading on 1 hour time frame, looking for pullbacks for entries, and he wants to know if OFA would be useful to him.
My first recommendation, and I'm not a pitch guy, so don't get me wrong, but my first recommendation would be to get some time with it so that you can kind of make that determination. It's so difficult to say what's effective for somebody. I used to tell people there was no use in looking at it except for with the ES. And then I had an oil trader come over to my house and sit down with me and show me exactly what I needed to be doing in the CL. And it blew me away, because I just never thought there was an application for it. To me, I think that I generally am more of a swing trader than I am what you would call a scalper. I'm typically looking for larger targets, and I use the order flow as a way to get in or not get in when I'm waiting for those key levels to come around. So I kind of think that it's something you need to spend some time with, and I'd be happy to spend that time with you talking about what it is that you're doing and how it might be applicable. I think that the most important thing when you are looking at anything that's out there is that you have an opportunity to actually talk to the people who put it together and say, this is what I'm doing, and can we look at this and see if there's any validity to it. Otherwise, it's just a shot in the dark. And I don't want to deal with that from the support side.
Okay.
So I prefer you know what you're getting into.
Okay, so we're at the 30-minute mark, but there's 4 questions left. We'll try to make them real quick.
Sure.
Racer is asking, what do you do outside of time and sales in terms of analysis?
Okay, well, I'll run through them quickly. The main thing that we do is order flow, which is, like we said, just kind of organizing the print. The second thing we do is what we call volume cluster analysis, and that's geared more to the things that I was just talking about recognizing where there are key inflection points, and sometimes where there's not, where you should expect that they are. And when we start to see clusters of volume pair together in various patterns, it gives us a great indication of sentiment and a little bit of psychology behind the trade. So that's the second thing that we do. The third thing that we do is kind of a derivative of cumulative delta, which I was kind of bagging on earlier, but it's set in a very small amount of price distance, something that we feel is relevant to the current trade, as opposed to trading across some massive range or series of ranges and trying to keep up with everything. So that is, to some degree, something that we do. And then the last component of it is really a derivative of the volume cluster analysis, which is essentially where we're making assumptions about where we're going to see the stops on specific blocks of trades start to come out.
Okay.
And when you have that kind of piece into it, then to me, it's a well-rounded approach, but
okay.
collectively all from more or less the same information.
Mike is asking if you can use OFA for automation. So, let's assume NinjaTrader. Do you expose the necessary data series and signal generators to be able to use it inside of a strategy?
Well, it's interesting that you say that or that you ask that, because that is something that is coming up fairly quickly for us. We've got some things that are going to be coming out relatively soon that directly deal with that. Up until this point, the only thing that we've done in terms of automation is custom integration. So, and we've done a lot of it. So generally what happens is somebody comes to us and says, I'm interested in putting the two things together, and we have to take the necessary steps to build the requirements around it, and then we do a custom build of the application for them to do the automation that they want.
Okay.
In the future, we're looking to make that a lot more flexible for the user, but that just comes with a lot of assumptions that I generally try and stay away from, because I just don't believe that this is an automated process.
Okay. Dimitri is asking if you ever look at the PREM, like the premium on the S&P, the fair value for program buying and selling. Is there any kind of relationship between that and order flow?
I don't, and again, I just prefer to keep it simple. I start up in the morning and I look at 2, maybe 3 instruments, and I look and see which one's likely to provide me with opportunity, and I find my spots and I go for it. I've just kind of, over the years, decided that I don't need all that extra information. It does more harm to me than good. That's not to say people can't make good use out of it.
Right.
Not me.
Jay is asking what markets you would not trade with order flow, since it might be easier to ask it the other way. Do you have any recommendations for or against?
My general feeling is that when you get into markets that are really super thin, things that just there isn't much of a print, it's not useful at all. And I've been proven wrong on every other front that I ever assumed, because I thought that there were things that it should never be applied to, and somebody showed me differently. So I don't see a lot of limitations, but I tend to stick to the things that retail traders engage in, because they're, in my eyes, the easiest competition, and kind of why things were built the way that they were. I also don't think that a lot of instruments trade the same as heavily traded retail instruments like currencies and indexes. I think when you get into physical commodities, you have a different opponent. I think when you get into bonds, you have a different opponent, just because they're being utilized for so many different things. But again, ignorance is bliss sometimes, if you just stick to what you know. So
Okay. All right, we're 5 minutes over, so I'm going to stop it.
Your question.
Sure. 5 minutes over at this point, so we're going to go ahead and stop the questions. Again, this is the Ask Me Anything session. These sessions are supposed to be quick, casual, limited to 30 minutes. It's not a full webinar. DB does have a full webinar coming up early April, so check back on the site for that. And I also want to mention one more time for anyone that joined late that normally we will be sharing video, but DB had a family emergency. He's on a friend's computer, so could not do that today. So anybody that did not get their question answered today, please go ahead and post it in the thread. DB, I really appreciate you coming on, given the situation, and I'll see you on the site. And I'll be posting this recording in the thread for anybody that wants to go back and take a look.
Very good. I really appreciate the opportunity, and thanks for all the questions and for putting up with the lack of video and everything. I appreciate it.
No problem. Thanks, DB. Thanks, guys.